call us, but we pretty much lead them from one task to another to make sure that they're carrying out their job responsibly.
Right. Okay. What are letters testamentary and letters of administration?
These are magic papers. These are, at least that's what I tell my client. These are the papers that open the doors. Letters of administration and letters testamentary are court forms that basically confirm that you have been appointed by the court as the personal representative for the decedent. With these magic papers, you can take them to the bank, you can take them to the insurance company, you can take them and gain access to the decedent's assets, brokerage accounts, things like that. They are the papers that open the door that allow you to close out the decedent's account, move the assets over into your account as the executor or administrator of the estate. Without them, no institution will, they may listen, but they're not going to turn over an account to you.
Okay. What's the significance of a death certificate?
Well, the death certificate is the formal document evidencing the death of the decedent, and typically on the death certificate it has the name, the full name, it has the address, last known residence, it has the domicile, it has the cause of death in certain situations, and most financial institutions are going to require not only letters testamentary or letters of administration, the magic papers that we just spoke about, but they're also going to require a certified copy of the death certificate. They want to make certain that the decedent has in fact died and that you are the proper person to whom control now vests.
Right. Okay. Now, as part of this probate process, are there some notice requirements that you have to deal with?
Oh, absolutely, and that these are the things that we guide our clients in, because we don't expect our clients to know them. When you petition to become the personal representative, there's notice that has to go out to heirs as well as the beneficiaries of the will that you're petitioning to be appointed. As to creditors, you have notices that have to be given to all known or reasonably ascertainable creditors of the decedent. So there are a number of legal requirements that an executor or an administrator has to perform in order to make sure that they've discharged their obligations and that the estate is ready to be distributed at the end of the creditor claim period. When an executor is appointed, there's a 4-month period of time that a creditor of the decedent can file a claim for services that he or she may have performed or for a contract that he or she may have entered into with the decedent prior to death.
Okay. How long does it usually take to probate an estate?
Well, Mike, that's a tough question, because I have seen estates probated as quickly as about 6 months, and that's about as fast as you're going to do it in most counties in California. I would submit that perhaps the average is between 9 months and 12 months for the vast majority of estates, and then there's a small proportion of estates that, due to circumstances quite often outside the control of the executor, take longer. A good example is if the decedent owned a home, and even though we had to do some fix-up and clean-up of the home, we put it on the market, it still doesn't sell. And so depending upon the market, it may take much longer to get an estate closed. I think the longest estate that we've been involved with is one that was open for over 40, 50 years, and
Wow.
I certainly know of estates that have been open longer than that, partly because so many people have died along the way that there's no one there to carry it on.
Oh dear, okay. All right. Now, for my personal accounting, I may just write, deposits in my checkbook and write my checks down and so forth. Some people don't even keep a checkbook. Horrors. Anyway, is that okay for an estate? What records and documents do you need to keep?
Well, the personal representative is charged with maintaining all the books and records for the estate. Unless waived, the executor must do an accounting to the beneficiaries or the administrator must do an accounting to the heirs of every penny that came in and every penny that went out. And California has a pretty formalistic structure in which this accounting must be performed. So it's not as simple a task of just keeping a checkbook ledger. What they do need to keep is copies of every check they write. They need to keep copies of all the financial statements that they receive from the financial institution, the checking account statements, the savings account statements, the brokerage account statements, because we'll put together an accounting based upon transactions that have actually cleared the financial institutions. Keeping informal checkbook ledger is helpful, but it's not going to be determinative. We're going to actually look at the checks that were actually written. You need to describe the purpose for what a check was written. You need to know the source of a deposit. And these are things that frequently the personal representatives will overlook.
Right. So it's better to make copies of the deposits, all those checks that you're putting in at the time that you put them in. Be sure that you get a bank statement that includes the check copies, because a lot of the banks these days don't want to provide those. So,
very helpful.
Yeah. Okay, we're going to have to wind up pretty soon here. One little thing that I'll throw out, of course, the thing that's dear to my heart, what sort of tax forms do you need to be concerned about related to an estate, or the estate in this case?
So when a decedent dies, there's going to be a final personal income tax return that the estate, the executor, must file on behalf of the decedent. So that's going to be a final federal Form 1040 and a California Form 540. In addition to that, the estate, when it opens up its accounts, it'll have what's called a fiduciary income tax return, a Form 1041 and a Form 541. And then if the estate's large enough, there could be a federal estate tax return that's required. Currently, for decedents dying in 2009, the exemption amounts $3.5 million, so very few estates are now required to file a federal estate tax return.
Okay. All right. One other little issue, what about property tax? Are there some things that we need to be concerned about in California related to that?
Well, when we have Prop 13 in California, so if a decedent owned real estate, the general rule is upon the decedent's death, the real estate will be reassessed, and hence property taxes will typically go up. There are some exemptions, the most common ones being interspousal exclusion, so if the property passes to a spouse. We also have parent-child exclusions, and in some cases parent-grandchild exclusions. So depending upon who is receiving the property, there may or may not be a reassessment. But property taxes, the change of ownership occurs with the death of the decedent, and oftentimes that can be a very significant cost that we don't think about.
Right, and there is a form that needs to be filed shortly after death related to that.
A notice of death of real property owner.
Okay, we're all out of time, so thank you very much for being with us today, Bob.
Michael, my pleasure.
And thank you for watching today. Bob's website, tcaklawfirm.com, and you can write to me at michael@financialinsiderweekly.com. If you have any trouble at that address, try mgray, Gray, @taxtrimmers.com.
Very good.